Afternoon, everyone. To be honest, right, this last week has been actually pretty quiet until today. I think the market knew I was going to do a little update, and so I thought, right, let's just throw some volatility in the mix. And we just for no real apparent reason that I've actually heard, apart from, I guess we were coming off the whole day. We've had some big down moves in stocks, and then we had a slightly increase in CPI number, as well as higher jobless claims number and a terrible Philly Fed number, where we actually came out minus 32 below expectations, and that really just riled up the market. And at one point we were down over 500 points in the Dow, 450 in the DAX, although we've made a lot of it back up. And it's the Bund, where we're trading right now, 135.82. It's actually traded a high of 136.26. Making it to yields maybe close to 2%, which is insane. It's actually up 190 ticks today, and everybody, I think people are just negating the whole logical fact about returns. The real rate of return is negative on the Bunds, but it's just safe haven. Just like people just want to put money where it's safe because they have so little confidence in the economy right now. If we look at look at a few of these charts and what's been happening, this is what's happened yesterday and today in the Bund. So we were at 132.60, and it's over the last week, 132.60 at the beginning of the week, and we've pretty much rallied almost 400 ticks, which is quite phenomenal, really. This bar over here, you see this long candle, this is on I think it was Monday or Tuesday, where the Sarkozy and Merkel came with some type of union between Europe and their taxes and stuff like that. So that was the initial volatility of that. Then we consolidated for the next couple of days, and then afterwards this is where we really pushed out the majority of the action happening today. And if we actually look at it, we've sort of formed the base at 132.60, where they tried to form a head and shoulders pattern, but it didn't actually break the actual previous level over here, and so it sort of formed a level of support here, and then it just pretty much just bounced up. And if we look at this move on the fib level right now, this is a 370 tick move. The first retracement level that we're sort of looking for would be the 38.2, which is at 134.77, so that's about 110 ticks lower. 50% would be at 134.34, and 61.8 would be 133.91. And as you can see, the previous high before this move up was 134.50, and we pretty much just blew past it. Didn't provide that much of a support. We had a little bit of a bounce on it. I think if we look at the 5-minute chart, we'll probably be able to see it a bit more clearly. So so that was the previous high over let's just go to 30 minutes actually. So this was the previous high, and we bounced off it. Let me go to 15. Sorry. So we bounced off of it. A little bit of resistance there. There's in a light 10 tick range, and then pretty much once it broke, it went up, retested that previous resistance, which was now support, and then from then it's only been one way upwards. And we see over here early in the week that there's been a lot of consolidation that's happened. Like this was very tight ranges, like a good day 20-30 point range in the Bund, which is very little considering the amount of movement that we've had lately. And again, the range was really tight, and as soon as we broke it, sort of edged up, little range here, edged up again, little range, and this is the big move that we've had today. And we were trading pretty much at highs before that Philly Fed number, and we still had pretty much a 70 tick move on the back of that number, which is quite big considering we were at the absolute highs. But I think it's pretty much putting in no doubt into people's mind about how much trouble that the economy is in, and pretty much how we're going back into a recession now, it looks like. If you look at the longer term chart in this Bund, I've just drawn the trend line that we've actually had, and since we were in the 126s, and we've actually stuck to it really well. And then from here this is when we bounced back down off of it, and then after we were hugging that trend line, and it was actually acting as a resistance before we actually came off, and now we've pretty much back into this massive uptrend again. So it comes to a point where mathematically this Bund can't really go up much higher unless we go into negative yields and things like that, like below 2%, below 1%. Come to a point where you rather just hold money in cash and put it in Bunds, in terms of the return that you're getting on it. So I can't really see it going that much higher than 137, 138. So we're actually at all-time highs in the Bund, which is just pretty phenomenal right now, considering the last time we were at these levels were when the stock market was much lower than it was now anyway. So in theory we've got a long way to go. Looking at the Schatz here, this is the long-term trend of it upwards. We're hugging it pretty well, and then it got a lot more volatile, and here's just the latest move up, pretty similar to the Bund. If we go to a shorter time frame, we can actually see that the Schatz has been, after last week's moves, been just ranging pretty much every day in relatively small ranges. It's a 9 tick range here, and then this one we went pretty much for a good half a day trading in a 3-4 tick range over here, had a little break up, and then we just arranged again, and then this was the mini range that we had, literally a 1.5 tick range for a good, since 9:30 this morning till just before the number, we were in a range of pretty much a tick and a half in the Schatz. It was not doing much. Typical August, how you'd expect it. But then as soon as the US opened, we pretty much started to just bomb higher, which sort of suggests to me that somehow this number was a bit leaked. Someone knew, people knew about it beforehand, and this is the pre-release movement on the number. And as soon as the number came out, lo and behold, had a big spike up, and now we've retraced the whole move. So that suggests to me something ain't quite right there. This was the previous high. We're actually at the previous high before the number. We bounced up, and then we're now testing that previous high again, which was now the support. So it'll be interesting to see what the Schatz does of this 109.68 level, and see if we if this is going to hold. This is the 1 minute chart. This is the actual previous high level. This is the breakout from it on the data. Retraced, good 10 fat ticks there. So this seems to be a significant level. Are we going to stay above this previous high level? Is this going to form a good basis of support, or are we going to just break back down again? And if that is the case, then I guess that we've got another 10 ticks to go to trade back where the previous mini range was before we started to break higher before the number. So the next level is the 109.57 if this level don't hold. So it'll be interesting to see what happens over here. I think playing the second wave up might be a good idea. Might be good. Have just a tight stop of a couple of ticks. If it breaks through, not much lost. But the real activity, really, that was volatile enough. But the real activity was in the DAX today, where we actually had a massive drop down. This is just on the 1 minute chart of the DAX, and we can just this is a 60 minute. this is the big move down from 7,300 all the way down to 5,500, as we were saying last week. And since then we've sort of pretty much traded in this big 500 tick range in the DAX, which, given the recent level of volatility, is pretty much the norm right now. We had a double bottom over here, which actually held quite well. As you can see from this RSI that I've got up here, the 2 points that we had a positive divergence between them, so I'll just draw a little trend line so you can see between that there. As you can see, the divergence between the 2 lows, so that was the first one and then that was the second one, we had a lot more of a positive divergence there, so it gave good reason to go long at this one, and gave you more confidence that this was going to hold, and in fact this actually did, and based off this it's bounced 500 ticks. Now we've come back to that level. It didn't quite reach there, but if we look at the relative strength of the 2 points, as you can see, it's pretty flat. So at this point it was a 50-50 whether it was going to break through or not, and so I didn't actually look to get into any trade over there. So this is what's happening with the DAX right now, but I just want to show you on a 1 minute chart what happens during a very August liquidity. There's been very low liquidity, and that's why we're obviously getting much more exaggerated moves. One of the biggest exaggerated moves that we had was in the DAX, and let me just remove this. This was earlier on in the day, right? So we were trading at 1809, and someone pretty much just sold. No, we just had, so we basically dropped 110 ticks in less than a minute, and it was just basically a stop that went off. Now you'd ask yourself how much volume would it take to drop an index as big as the DAX down 110 ticks. I can tell you the answer to that. It was 611 lots. That's how thin the market was today. 611 lots smashed this DAX down 110 fat ticks. And bear in mind that DAX is priced in half ticks, so that was 220 prices, 220 pips, 611 lots pushed down the DAX. Now, this is why many people don't like trading in August, because of the thin liquidity and because of moves like that. And you know, it's a 50-50. You're either, if you manage to catch that move, you know, you have been very, you know, good for it, but at the same time you don't know what the move is for, why it's happening. And in the next bar we didn't even get a bar, and then after that we opened up and then we traded 2,500 lots as people reevaluate the positions, got stopped out or whatever happened. But 611 lots, that's what pushes the DAX down 110 ticks. So anyway, this is going to be my last update till September, because I'm going to just take some time off, as the market just becoming a bit too liquid. It's just very difficult to make any sound judgments, and it's just too easy to be pushed out by little volume like I showed you in that DAX. So until September, good luck with your trading, and I'll update again then.